Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, March 17, 2010. In midweek trade, the broader U.S. equity markets are in positive territory. Central banks as well as U.S. inflation data have both been in focus. Now, in terms of PPI figures for the month of February, they fell to the sharpest in 7 months. Now, month over month, PPI in the U.S. declined by 0.6%, while the core PPI figure, which excludes food and energy prices, rose by 0.1% month over month. Now, the drop in prices for the headline PPI figure came as energy prices slid by 2.9% in March. Meanwhile, the latest inflation figures added to overall risk sentiment seen in the market one day after the Federal Reserve left interest rates unchanged. Meanwhile, overseas, the Bank of Japan left their key target rate unchanged at 0.1%, but they did increase the size of their 3-month loan facility. Taking a closer look at the spot FX market, the U.S. dollar is trading higher against the euro and yen, but lower against the British pound. Now, the British pound is seeing gains against both the U.S. currency as well as euro today. Now, this does follow UK employment figures as well as the BOE's latest MPC minutes. The minutes show that all members of the MPC voted unanimously to leave rates unchanged. Meanwhile, UK unemployment claims fell by 32,300, which is the fastest pace since November of 1997. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And now in your daily trend report, let's start out by looking at all of the major IC FX option pairs. Now, we'll start out by looking at the AUX. Now, that is the U.S. currency against the Australian dollar. For that pair, it is turning down. The RSI broke below a bullish trend line, and the preference of trading central analysts is short positions below the pivot, which is at 116.50. with targets standing at 106 and 102 in extension. And moving on to the BPX, which is the US dollar against the British pound, the upside does prevail. Now, for that pair, the pair is rebounding on its support, and the RSI remains within a bullish channel. The preference of trading central analysts for the BPX is long positions above 65 with targets at 68 and 70 in extension. Now let's take a look at the CDD, which is the U.S. currency against the Canadian dollar. Now that is under pressure, and the RSI did break below a bullish trend line. The preference of trading central analysts for the CDD is short positions below 104.50 with targets standing at 197.15 in extension. Now moving on to the EUI, which is the U.S. currency against the euro, a rebound is expected. Now the pair is pulling back on its bullish channel lower boundary, and the preference of trading central analysts is long positions above 72 with targets at 74.50 and 76.15 in extension. Now moving on to the SFC, which is the U.S. dollar against the Swiss franc, the upside does prevail. Now for that pair, it is pulling back on its bullish channel lower boundary before a new up move. The preference of trading central analysts for the SFC is long positions above the pivot point, which is at 105, with targets at 108.75 and 110.25 in extension. Last but not least, let's take a look at the YUK. A rebound is expected for the U.S. currency against the Japanese yen. Now, for that pair, it is rebounding on its support and should reach its previous high. Now, the preference of trading central analysts for the YUK is long positions above 88 with targets at 93.50 and 96 in extension. Now let's move on to your weekly trend opinion. Now, last week the dollar traded a bit choppy against the major currency pairs, and trading central analysts took advantage of its weakness to enter short British pound positions. Now, trading central analysts are still holding on to those positions. And in terms of portfolio performance, it currently stands at 1,470.37% since its inception, and since the beginning of 2010, it is up by 169.56%. And we do have two trade alerts for you here, which is for the SFC as well as the YUK. Trading central analysts recommends calls on the SFC. The RSI does remain supported by a rising trend line, and the SFC should be rebounding in the bullish channel lower boundary. In terms of the YUK, trading central analysts are keeping a close eye on this, as a dollar rebound is expected against the Japanese yen. The pair has rebounded on its support, breaking above a declining trend line, and that does call for a further up move. Next week, trading central analysts will be looking at the CDD, the SKA, as well as the NZD and the AUX. They will be looking at the SKA because it has broken below its bearish flag lower boundary and should reach its previous low of 67.50. They are looking at the CDD because it's challenging its strong support level, and a break below this area will call for further weakness. They will also be looking at the exotic pairs of the NZD as well as the AUX because they are approaching key levels. And that wraps it up for today's FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.